Thanks, folks, for being here, and a very warm welcome to this evening's basic income conversation, paying for basic income. And we're going to be talking about monetary financing and sovereign money. So if you're here for that, you're in the right place. My name is Michael. I'm the director and co-founder of the Basic Income Conversation, and I am helping to host this evening's event. Thank you everybody for joining us this evening, and for those watching back on YouTube, we are recording this evening, so you'll be able to listen back afterwards. So a very warm welcome to you too, and thank you. Tonight you are joining our third and final event of our summer series of basic income research events hosted by us, the Basic Income Conversation. We are a new initiative supported by the think tank Compass, that brings together researchers, politicians, activists, and civil society to promote the idea of basic income in the UK. We have 3 strands of work at the Basic Income Conversation, and tonight fits into our research strand, where we bring together some of the best researchers on basic income to share some of the latest cutting-edge research and ideas around topical themes relating to basic income. So far, we've looked at the future of work and pilots in our series, but tonight we are focusing on potential ways to pay for basic income. How are you going to pay for it? That is often the first question I get asked when talking about basic income. Traditionally, the answer to that question has been some mixture of changes to the tax and benefits system, essentially implementing a more progressive tax system to allow the wealthiest to pay a fairer share. But as we've seen a huge surge in interest in the idea of basic income because of COVID-19, there's also been a surge in an idea elsewhere, and that's modern monetary theory. It offers a potential way of paying for basic income. I honestly don't know a huge amount about it. So tonight, our aim is to hopefully learn more about what it is and how it might work to pay for basic income. And to be clear, we're not necessarily promoting this as the way, the answer, but we're certainly interested in it, and it's certainly going to lead to an interesting conversation. We have assembled a brilliant panel of speakers to help us think through that. Shortly, I'm going to hand over to Dr. Emma Dawnay, who will chair our discussion this evening. Emma is joined by prominent writers and economists Francis Coppola and Geoff Crocker. A huge thanks to them for joining us this evening. But before I hand over to Emma, Francis, and Geoff, we've just got some housekeeping. So everybody is muted this evening, except from our speakers. But those of you joining live this evening do play a very important part in tonight's conversation. I'd first like to see where everybody is calling from this evening. So if you could put your name and where you're calling from in the chat box on Zoom, that would be brilliant. It'd be great to see where you're all calling from. I know there's a few international guests as well, so do put your name if you feel comfortable and where you're calling in from. So you've got Annie from Leeds there, and I'm sure there'll be more who share too. In this chat box is where we will be using, where we'll be taking questions this evening. There will be a Q&A around 7:10, and you can submit your questions at any point throughout the webinar. If you could do that by sending them to me on the chat, and me is Compass Office. But if you just put it in the chat, I'll try and track them too. And I'll be sorting through some of the questions and picking out the best ones for Francis and Geoff to answer. We won't be able to get to everyone, I'm sure, but we will do our best, and we'll get to that around 7:10, as I said. We'll hear from, in terms of the agenda, we'll hear from Emma, Francis, and Geoff first. They'll each have some reflections and some presentations. Then Emma, Geoff, and Francis are going to have a short conversation, and then at around 7:10 we'll take your questions. And if you're listening back on YouTube, that's after about 40 minutes or so. And as I said, we are recording. Welcome to those joining us on YouTube. But that's enough from me. You probably won't hear from me until the end. But now over to Emma. Emma is an expert on sovereign money, having been a board member of the Monetaire Modernisierung, I hope I've said that right, MOMO, the NGO which brought about the referendum on sovereign money in Switzerland, which is where Emma is calling in from this evening. Emma previously worked at the New Economics Foundation and has twice stood for the Green Party at parliamentary elections in the UK. So I'm going to hand over to you now, Emma, and I hope you'll all enjoy the conversation this evening.
So thank you, Michael. Well, very quick background to myself. I was doing an MBA in the year 2000, having been working as a scientist. The disparity between the economics I was being taught and what I experienced in the dot-com boom and bust was so great that I totally changed track and changed my career to focus on economics. After the financial crash in 2007-8, I was in Switzerland, where I joined the NGO which brought about a national referendum on sovereign money. So this brochure explains all about what we did, and I'll put a link on the chat in a bit so that if you want to look it up, you can. The referendum finally got round to taking place 2 years ago. It takes a long time because it's part of the I sort of strongly disagreed with this because we're actually already living through an unprecedented experiment with central banks around the world behaving in ways totally undreamt of just a few years ago. For instance, the Swiss bank had more shares in Facebook than Mark Zuckerberg. So really, unthinkable stuff from a few years ago.
Emma, sorry to interrupt you, but some people are having difficulty hearing you at the moment, perhaps because of the audio. Would you be able to turn your camera off? And that would enable perhaps to help with the Wi-Fi situation.
Right. Stop video, that's right?
Yes, that might be able to help.
Okay, how about that?
Carry on. Yes.
And yeah, so despite this opposition from the Swiss National Bank, we got a quarter of the vote, and in short, every Swiss voter is a little better informed about how the money system actually works. So just very briefly, I'll go through how does the system work at the moment. Well, commercial banks create money in the form of bank deposits by making new loans. When a bank makes a loan, for example, to someone taking out a mortgage to buy a home, it does not typically do so by giving out thousands of pounds worth of banknotes. Instead, it credits their bank account with a bank loan the size of the mortgage. At that moment, new money is created. So that was actually a quote from a Bank of England report. It then continues to explain that the central bank can also create money by buying assets such as government bonds, which has been done on a massive scale since the beginning of the corona pandemic. So this means that in the current system, the amount of money circulating and the total amount of debt go more or less hand in hand. And if debts are paid down or written off, the amount of money in circulation drops, which causes a contraction in the economy. If people and firms are unwilling to borrow, only more government borrowing can prevent the economy from contracting further. So I'll leave it to our experts, Francis and Geoff, to explain modern monetary theory and how quantitative easing and sovereign money could be used both in general and at this time in the COVID pandemic in particular to prevent a sharp contraction in the economy. Given that it's likely that many people will lose their jobs in the COVID recession, I believe a basic income is needed more than ever. I'm really excited to hear more from our experts about how it can be funded in ways that go beyond taxation, and further, if this distribution of basic income could actually be considered beneficial to the economy. So now I'd like to introduce Francis Coppola. Francis is a prominent writer on finance and banking and an expert in this field. She's the author of the book, which I've got in front of me, you can't now see it, The Case for People's Quantitative Easing. And she's a prolific blogger on her finance and economics blog, Coppola Comment. Having previously worked in banking and risk management, she now writes about how it can and should change and is a proponent of basic income. So Francis, I've been a fan of yours for a while, so anyhow, very warm welcome. over to you.
My goodness, follow that. Thank you very much, Emma, and a lovely introduction. I do hope I live up to it. I thought this evening that as we are discussing sovereign money and modern money theory, I would start with some definitions. So I've got some slides for you. Hopefully we'll just give you some points to remember when we're discussing sovereign money and modern monetary theory and how this all comes together into something that hopefully could fund a basic income, even though neither sovereign money campaigners nor MMT necessarily support that. So without further ado, I'm going to share my slides with you. Let's hope this works, okay? And you'll okay. So let's talk first about sovereign money and what we mean by sovereign money. In a simple definition, sovereign money is simply the money that is created by the government or by its central bank. That's not all money in circulation, and Emma's explained that a little bit already. But for our purposes tonight, we're going to talk about sovereign money. So physical cash, notes and coins, and electronic bank reserves are sovereign money. Some forms of sovereign money that have been discussed recently that don't exist yet, such as citizens' accounts at central bank or central bank digital currencies distributed through digital wallets. Those would also be sovereign money. But I think this important point here about sovereign money is that a sovereign government can create all the money that an economy needs, and I'll return to that in a bit. But most governments or central banks don't. They delegate that their money creating powers to the commercial banking sector. And that can all go horribly wrong when the commercial banking sector doesn't act as it should as an agent of the state, creating the money that the economy needs, when the private sector becomes, households and businesses become too highly indebted, so they don't want to borrow, or banks become too risk averse, so they don't want to lend, or we have a recession and everybody's paying off debts like crazy and some people are defaulting. And as Emma pointed out, when that happens, money gets destroyed. And I think what we want to do with income is to try and make sure that people have an income, a basic income, that is not subject to these swings of demand, swings of supply, that there's some kind of floor, some kind of income that is people's by right and which they can never be deprived, so that everybody has the basic means to live. And I think in coronavirus, we've particularly seen a need for that. It was been quite striking how difficult it's been to get money to people who desperately need it. Sovereign money campaigns typically call for commercial banks to be stripped of their money-making powers and for all money to be created by the government or central bank. I don't think we necessarily need to go as far as that to have a sovereign money basic income. But I think it's worth mentioning that in the course of this, that it is a direction down which we could go. It's also known as full reserve banking. It's quite different from modern money theory, and yet, that should say monetary theory, my apologies to those who are familiar with it, should say modern monetary theory, typo. Modern monetary theory is much wider than sovereign money. It's an economic theory that its advocates say describes how the modern financial economy works. Now, I might say, yeah, but there are lots of reasons why it actually doesn't work like that. Like we've created lots of laws that, for example, stop central banks financing government spending and things like that. But they're saying, let's leave all that aside. This is how a modern monetary economy based upon what we call fiat money that is created by government, simply by government order, rather than being related to being a physical thing like gold or something like that. This is how it works. And the key points are these really, that government spends money into existence and taxes don't finance government spending. Governments don't need to borrow in order to spend. They can simply create money. Government deficits reflect the private sector's desire to save, and that governments should run deficits large enough to maintain full employment. MMT's primary objective is full employment. Everyone who wants a job has one. For them, household income should come from productive work, and full employment can be maintained with universal job guarantee. The universal job guarantee is at the heart of MMT. It's not an optional extra, as some people have been suggesting. So when we're talking about money creation through MMT, government deficits and so forth, we should bear that in mind, that job guarantees are an important part of MMT. Many MMT advocates oppose universal basic income because it doesn't require recipients to work. But the problem with having just a universal job guarantee is that there are always some people who can't work, and there are always some people who won't work. And if you start forcing them to work by depriving them of the means to live, then you're in the realms of workfare. And many MMT people also say they don't want to go down that route. So a low basic income now does feature in MMT literature as a backstop for people who can't or won't work. The opposition to UBI really came from early MMT literature that used adjusting the job guarantee wage as a way of controlling inflation. But more recent MMT literature tends to rely on taxation as a primary means of controlling inflation. So I think you can see, hopefully from that very brief summary, that both MMT and sovereign money really are saying the same thing, that a sovereign government can create all the money that its economies need. Now, what do I mean by a sovereign government? A sovereign government is one that issues its own currency. If you have a government that is not issuing its own currency, so that might include countries that are using the currency of another country, like Ecuador, for example, or governments that have, say, clubbed together to issue a currency that none of them unilaterally issue, as in the Eurozone, those governments actually are not sovereign, and they would have difficulty doing what we're proposing tonight. They can't simply create all the money they need. They can only do that by agreement with whatever it is that they're using as their national currency. But so we'd have to leave aside those governments. But let's look at governments like the United Kingdom and the United States, which are sovereign currency issuing governments. They can create all the money their economies need. They can fund a basic income. They choose to create money through most of their money through their commercial banking sector acting as their agent, but they don't have to. They don't need to borrow to finance spending. Government debt is needed by the private sector as a safe savings vehicle, and it's needed in financial markets as collateral. A sovereign currency issue government can't be forced to default on its debt, but money creation in excess of the economy's productive capacity can cause high inflation, which erodes the value of the debt and can be regarded as a form of default. So basic income, and I think given what I've said, it should be apparent now that the real issue with funding a basic income is not the government's ability to borrow or create money, it's maintaining the value of that money. A sovereign government can create the money it needs to finance a basic income for all its citizens, and it doesn't need to borrow to do that. The risk is that if that money creation exceeds the productive capacity of the economy, then we can end up with high inflation. Now, there are various ways we can control inflation. They can control inflation by issuing bonds. It's one of the reasons for issuing government debt, actually, is to control inflation. By raising taxes, by adjusting the basic income downwards in much the same way as MMT was proposing for controlling inflation by adjusting the job guarantee wage downwards, and or by raising interest rates. Which of these measures is adopted is a political decision. All of those lean against the demand for money, demand for goods and services that can raise inflation. And there's another way of leaning against inflation as well, and that is to develop the supply side of your economy. If your productive capacity can rise, then you aren't going to have inflation. You're just going to have a very vibrant economy, and that's a good thing. So government could also lean against inflation by encouraging supply side development, and that might include a job guarantee. It might include incentives for new business creation, R&D support, might include direct investment in the economy. There's a lot of things that governments can do to control inflation. So, and that leads me to my final conclusion. The biggest opposition I always see to basic income, the strongest argument against it that I see every time is always it will be inflationary. Inflation is always and everywhere a political decision. It's all to do with your policy mix. So the fear of inflation should not prevent sovereign governments from creating the money needed to give their citizens the basic means to live.
So thank you very much, Frances. That was fascinating. And yeah, I got lots of questions. And if other people have got questions, I think please submit them on the chat box and we'll come to them in a moment. But now I'd like to introduce Geoff. So Geoff's new book, Basic Income and Sovereign Money, makes the case for a universal basic income funded by debt-free sovereign money. Geoff has worked extensively on technology strategy and policy for governments and multinational companies before exploring the relationship between technology, basic income, and sovereign money. Geoff is also the founder of UBI.org, a partner of the Economics of Basic Income research project at the IPR at the University of Bath, and a partner of the Basic Income Conversation. So over to you, Geoff.
Thanks very much, Emma. Thanks, Frances. Thanks, Michael. And I trust you can see my slides now. Okay, so in this presentation, I'm going to assume that the case for basic income has been made and is agreed, i.e. on the familiar grounds of social justice, that basic income addresses inequality and precarity and shares the inherited infrastructure and technology that we inherit, points made by Guy Standing very powerfully, that it's the best welfare system if you're having any welfare system because it's less intrusive, lower cost and higher uptake, points made well by Malcolm Torrey in his work. Thirdly, that it deals with the problem of macroeconomic demand, i.e. meeting income need as wage seems to be reducing against output. And that's my own particular interest, that technology is causing a reduction in macroeconomic wage and indeed in the personal microeconomic wage, such that we're getting poverty in work, etc. And that the basic income would avoid debt crisis and austerity, the subject of my book. That there's an ecological advantage because it breaks the link between income and more output and resource depletion and pollution, and that very powerfully it enables human flourishing by different forms of lifestyle to those that are on offer at the moment. So I take it that those points are all made and we all want a basic income. So therefore, the question is as to how to fund a basic income. And to address the old chestnut that UBI is either too small to be meaningful or too large to be affordable. Now, looking at the possibilities of funding a basic income, here are some of the funding options that are often proposed. In the left-hand column there, revenue neutral options where higher taxation and the replacement of other benefits will fund a basic income, or other proposals for a wealth tax, a land tax, an eco tax, or a sovereign fund investment, before we come on to sovereign money creation. And my comment against each of those is that the revenue neutral schemes proposed actually in another Compass report, very good report, but it's a revenue neutral scheme. The only change actually in the outcome is unconditionality and less intrusion. And beneficial as that is, I question whether that is a significant gain enough, a sufficiently significant gain to warrant a move of system. My colleague Stuart Lansley is very keen on a wealth tax. He points out that there's 12 trillion of wealth in the UK, 12 trillion pounds, and that this could be taxed at a small percentage rate per year. And my comment on that is that it is actually very difficult to tax a wide range of assets fairly and continuously. You know, some people may hold their wealth in money, that's pretty easy to tax, but other people hold their wealth in shares in PLCs, in shares in private companies, they might have properties in various parts of the world and so on. So either forcing sale of those properties and the potential effects upon the markets of which those properties are a part, or in managing this effectively is, I think, a huge managerial challenge. Land tax is also often proposed, but my problem there is that most of the very profitable FANG companies, you know, the virtual companies of Facebook, Amazon, Netflix, and Google, use very little land. So they wouldn't be contributing much via a land tax. Eco-tax is also proposed, and we would be favorable towards that, except that eco-taxes are designed to promote reduced pollution, i.e. the eco-tax would self-cancel over time. So it's not therefore a permanent solution to funding a basic income or sovereign fund investment of the likes of Norway with a sovereign fund. But I'd comment there that that requires one of the above strategies over time. So hence we come to sovereign money creation, which is a heterodox paradigm change. It's a big shift in the economic paradigm. Looking at the present economic paradigm, it's pretty much of a mess. So the financial state that we're in is that the debt is everywhere. It is, as one book calls it, a house of debt. So UK household debt in 2018 was £1.28 trillion, i.e. 61% of GDP. Now, whilst most of that is property debt, quite often debt, as we know, is taken against property as the asset in order to spend on consumption, be it a new car, be it essential consumption, be it a holiday abroad or whatever. And indeed, that debt has increased between the period 1416 and 1618 by a further £12 billion in the UK, 6 billion of it in hire purchase agreements and 7 billion it in student loan. And there are the ONS data streams below. And when we look at the national debt, a similar position. There's the UK national debt on the left, which is currently 85% of GDP and likely to exceed 100% of GDP after various COVID funding schemes, whereas Japan had already achieved the star result of 234% of its GDP as its national debt. So the system is awash with debt. Extraordinarily, we all owe each other in the UK 146% of our GDP, i.e. would take a year and a half of our total productive capability to repay this combination of household and national debt, and it is increasing due to COVID-19. The problem then is that this household debt and government debt constrain expenditure. We find governments say they can't spend on necessary social programs because they've hit their deficit constraint. And Stephanie Kelton usefully explodes that myth in her new book, The Deficit Myth. And of course, households find their expenditure constrained because they're up to their necks in debt. And we have poverty, including in work poverty, demonstrating that employment itself today is not a guarantor of substantial, sufficient income. And we get austerity. So the debt, as it amounts, then becomes a constraint because of financial orthodoxy. So I'd like to consider as illustrative steps towards a more radical heterodox future, first of all, replacing household debt with basic income funded by sovereign money, and secondly, replacing that government debt with sovereign money to enable the restoration of austerity cuts. We do need to rethink the definition of money in the economy, and we need to take debt as a constraint out of the system, because we've built this artifact ourselves. It's a human-created artifact called money. We've then applied, as Francis said earlier, certain rules to this process, and the rules then constrain us from living as we could live if we hadn't created this bond for ourselves. So we need to move from financial orthodoxy, where money has inherent value from gold reserves or the sale of government bonds which create debt, where money is real, can't be created or destroyed, where government budgets must balance, where household and government expenditure is debt financed and therefore limited by debt, and affordability is defined by government financial reserves. Two, a heterodox theory of money, i.e. that of sovereign money, where money has no inherent value. There actually is a magic money tree, but it derives its value entirely from output GDP, which is where I differ somewhat from the MMT school, who, as Francis said, says money derives its value from taxation, from its role in taxation. Sovereign state, in this case, can issue money versus GDP. I think that's a commonly accepted view in all monetary theory today, including by the Bank of England, but without creating debt. And that's where a difference arises, and a strategic difference. Sovereign money, I claim, is needed in high technology and economies, and I'll briefly say why I think that. and that household and government expenditure is funded by sovereign money, so that affordability becomes defined by real resources and by productive potential, and not by the amount of money that happens to be in the government's bank account, which is only an intermediate economic variable. So defining sovereign money, here's an attempt to show the three definitions that I can see in the literature by the MMT school, which again, as Francis said, see sovereign money as a guarantor to fund job guarantee programs, Green New Deals and Medicare for all. In this case, money is still taken as debt. That's where I would differ with the MMT school. They claim through the identity which Wynne Godley, the late Wynne Godley, very famous British Keynesian economist, Wynne Godley pointed out that all the financial surpluses in the economy balance. So if the government spending is in deficit, it's balanced by other surpluses in the two other financial sectors of the economy, and therefore, in a sense, it doesn't matter. Now, that view developed very forcibly by Randall Wray and also presented very eloquently by Stephanie Kelton, is the MMT view of sovereign money. Another view which entered into the Swiss referendum through my colleague Joseph Huber is that, as Francis said also, that bank money should be stopped, in the sense that commercial banks should not be allowed to create money because they do so irresponsibly, and that only the central bank should create money. The third view, which is the one I would espouse, is that of basic income, where sovereign money fully funds aggregate demand, both personal demand through a basic income and government demand through government social programs, to avoid debt crisis and austerity. In this scenario, the central bank money does not create debt, and central and commercial banks both can create money in this proposed system. So those are the three definitions. I offer a thought experiment as a background to this, which I've offered several times before, i.e., if technology proceeded to the point where we had a totally automated economy and all the goods and services were produced by plugging a machine into the earth, then the only way to distribute the goods and services would be by vouchers to the whole population. Those vouchers represent a basic income, and the vouchers themselves represent sovereign money. Now, of course, we're not in a situation where a machine produces everything, but there are strong elements of that in our manufacturing economies. So my nuanced argument is that in high-tech economies, some element of basic income is essential and some element of sovereign money is essential. So we end up with this benign scenario where all is beautiful and basic income and sovereign money as the corrective for economic crisis and austerity policy. So output GDP generates all things. You know, we can consume what we can produce, and we can't consume if we don't produce. This is sort of basic. And that then leads to the generation of debt-free sovereign money to fund government expenditure and welfare benefits, to fund consumer basic income and expenditure, leaves us with no austerity, no crisis, reduction in poverty and inequality, and an increase in ecology and humanity, all set out on the website there. And finally, unashamedly, drawing your attention to my recent book, Basic Income and Sovereign, ashamedly because I have a no royalty deal on it. And so, but there I do try to set out these arguments more thoroughly. So thanks for listening. Be very interested to whatever comments you have, and sorry for my original technical hiccup.
So thank you so much, Geoff and Francis. So I've got one burning question before we get on to us going to other people's questions, and that is, given our situation with the COVID pandemic, are you seeing an uptake in the debate on basic income and how it's funded, you know, from people who could actually make a difference in the political sphere? Yeah, so can I ask Francis first?
Yes, in fact, we have been for a while. You know, so we've had articles in the FT advocating basic income and advocating sovereign financing of government spending, which added together add up to sovereign money financing basic income, and FT being really writing an editorial supporting it. I mean, that is a major change, even from, you know, the financial crisis, when, you know, supporting basic income was definitely on the weird fringe. It felt like it had come home. We're still a little way off from it being accepted on the right wing of politics too much, gaining some ground on the left, which is in a way unfortunate, because we'd quite like it to gain ground on both sides at once. Otherwise, it risks becoming a party political polarization problem. Yeah, but certainly, yes, it's gaining a lot more. It's coming in from the coals and becoming now a serious policy proposal.
Thank you. Geoff, have you got anything to add to that?
Yes, I think that's certainly true. I mean, many of us are going to have to think of something else in order to stay weird, because we're getting normative. But certainly on sovereign money, the sovereign money view is being espoused by a number of people. I mean, I heard Adair Turner recently give a presentation in which he was essentially presenting sovereign money. He accepts these debts are never going to be repayable, and therefore they should never have been incurred in the first place as debt. And you look at the UK funding for COVID now, talking about a scheme total of £645 billion. Now, whilst I welcome that kind of expenditure, I don't welcome it being taken as debt. And I see no logical reason why it needs to be taken as debt through the gilt markets. I see no reason why that £645 billion simply can't be issued as sovereign money without any debt. And you make that kind of point and people say, well, that would sound wonderful, but can it really be done? Well, it can really be done, because at the moment we create debt and never repay it. So why create it in the first place?
Okay, thank you. Now I'm going to go to some questions from our audience. A question from Ian. Does Frances share Stephanie Kelton's deficit myth theory? And if so, does she believe that politicians should be more honest with the people they expect to vote for them?
Yes, actually, I do. I think we frightened ourselves. For ideological reasons, we allowed ourselves, politicians, deficits completely unnecessarily in order to impose a small state ideology. It was completely unjustifiable. It was unjustifiable even 10 years ago, and it's even less justifiable now. Now, if we go down the same path as 10 years ago, trying to reduce deficits prematurely when the private sector, when unemployment's very high and the private sector is desperately saving like crazy, which they are at the moment, we're just going to end up with a mess. We cannot go down that route again. So yes, I do agree with her, and I do think that politicians actually need to level with people if they are proposing austerity, because they believe the state should be cut.
Thank you. Geoff, do you want to add to that?
No, I mean, as I indicated earlier, I think a lot of Stephanie Kelton's views are correct in terms of blowing up this deficit myth. It is a myth, or the debt myth. I mean, the idea this is a burden on our grandchildren is a myth. Nobody's ever going to repay it. I don't agree with her on some more detailed issues, as I indicated earlier, that I don't actually agree that money's value is derived from its acceptance as a means of paying tax. I think it's derived from its means of being used, accepted for the payment and the purchase of goods and services. I also, of course, don't think that money issued should be regarded as debt. And I think the argument that Stephanie and others pursue, that it's balanced out by other financial surpluses in the economy using this win-godly identity, my challenge is a bit technical, but I do think they end up using the godly identity as an explanatory formula equation, which I don't think it is. And I don't see the need to go down the debt route. Let's not regard money creation as debt. So some of those things, which I think within the MMT schools, some people may be persuadable in debate, but other parts of the MMT school, and this doesn't include Stephanie, but some of them have some very, very strong views, which are quite fought about actually, and they won't go to one another's conferences and so on. You know, we need to get more inclusive discussion about this in order to change the current paradigm.
Yeah, absolutely. Probably find that everywhere. So another question, this time from Alex Howlett. Would basic income have been a good idea 100 years ago? And is basic income only worthwhile because of automation? Geoff, do you want to start on that?
That's a very, very good question. I mean, I trace in my work the wave since 1948 to 2016 in some UK data series that earned income has become increasingly deficient as a means to fund consumer expenditure. And there is now a lot of unearned income in the economy anyway to match against production. So part of the answer, I don't pretend to have all the answers, of course, but part of my suggestion towards an answer was that back in 1948, it appears that earned income was sufficient to meet consumer expenditure. So perhaps in a non-technologized economy where technology does not claim any part of the output, you may not need a basic income for that reason, but there may be other reasons, such as Guy Standing's arguments for social justice and so on. But definitely I would claim that as the technological phenomenon has progressed over the last 70 odd years, earned income has become insufficient. And this is backed up by observations, for example, of real wages in the United States, of having flatlined for the last 30 years, backed up by the fact that we see in work poverty. Earned income is no longer sufficient to meet aggregate demand or to meet the needs of people for their consumer expenditure. So I do think that it's a technological phenomenon. Others will say that it's actually due to the shift in bargaining power from labor. And I can see that argument, but I personally think that in the face of developing technology, even if labor and the trade unions had all the power in the world, wouldn't actually be able to stop the fact that modern production needs less and less labor unit per unit of output.
Okay, Francis, do you want to add to that?
I have a slightly different take on this. Because I was reading some research from the IMF, which was looking at universal basic income in developing countries, which obviously are not high-tech economies. They're not suffering this technological explosion that's, means that robots are all taking over. Many of them are still agrarian and industrializing. And the IMF actually concluded that universal basic income would help enormously to eliminate poverty in those countries. So much so that the IMF actually concluded that the case for universal basic income in developing countries was pretty much made, and it was in developed countries with that had good social safety nets, like Scandinavian countries, where it's actually much harder to make the case. So actually, given that, I do think that universal basic income, even 100 years ago, would have been a good thing. We had terrible poverty in Britain in 1920. We really did. It was awful.
Yeah, thank you. There's questions from Bernard and Gordon about the job guarantee. Does a job guarantee, i.e. labour, still play a role in your approach, or is it a voluntary or unpaid work guarantee? And why can't we have short-term UBI with long-term job guarantee? Do you want to start with that, Francis?
I think that's more than slightly odd, because UBI is long-term by its very nature. It's basically saying that everybody all the time throughout their lives needs an income on which they can depend. Now, that might also be matched by a long-term job guarantee that they have a job for their working lives. But what people do during their working lives, and I think this is particularly true for women, and maybe it should be more true than it is for men, varies during that time. You cannot say to somebody, right, you leave school at 18 and you go into that job and you stay there until you're 66, and then you stop. We've been down that route, we've been there, and that's changed, and so it should change, because actually what people do is move in and out of various forms of work, various forms of employment and not employment and study and so forth during their lifetimes. It should be the same. Somebody's just said the same for men and women, and I agree with that. It should be men as well as women who work in this fluid type of way. So for me, what we need is the underpinning of a long-term stable universal basic income, and really the guarantee of you can do what you want employment-wise and work-wise, and including forms of unpaid, what we don't recognize as work now but actually are, of course, like caring for children and caring for elderly people and so forth. We actually need to change the whole way we think about this, that it's the universal basic income that is the stabilizer, and people move in and out of what we call paid work as they need to during their lives.
So, Geoff, do you want to add to that? Just to say we've got masses of fascinating questions coming in, which is
I
fantastic.
agree, incidentally, with all Francis said about developing country economies, and I indeed have a friend working on basic income in post-conflict situations like Syria at the moment. So yeah, no, I agree. On job guarantee, I'm not persuaded, because I think it's just hugely complex to administer. What's this job guarantee going to be? You know, are you going to say to somebody that in their profession and in their area of qualification that they will be guaranteed a job within a certain distance of where they live and for a certain period of time and at whatever income levels and so on and so forth? I think it's extremely difficult to promise that. And if you're promising people much more basic occupations, then you've got the problem of phasing people in and out of them as the economy goes into recession or grows. And Stephanie Kelton in her book says that, you know, that would happen. I can't quite see how that would happen. And it does end up looking like workfare to me, frankly. And furthermore, if the technology really is replacing the need for work, and let's again face it, over the last 100 years, the working week's declined from 100 hours a week, 70 hours a week, 35 hours a week, and is ever going down, then no guarantee can stop technology taking the need to work away. And if there is a possibility for us to reconsider our lives in the light of that technology, to flourish in different ways, then maybe quite a big change philosophically, but why not?
Thank you. A question from Paul. If a sovereign government can create all the money the economy needs to fund a basic income, why do so many people still ask, how will we pay for it? Is it financial ignorance? Is financial ignorance the biggest obstacle basic income advocates face? Do you want to start with that, Geoff?
Yeah, well, it's a reasonable question, isn't it? You know, you present something that's going to cost 50 billion, 150 billion, people say, how are you going to afford that? Until you look at some of the household debt figures in the UK. So prior to the crisis, new household borrowing hit 166 billion in a year. And if that amount of money had been allocated in basic income instead of as household debt, we wouldn't have hit the crisis, and we would have had the same macroeconomic result. So, of course, it's a very reasonable question as to how we afford it. The question is, in my view, as I tried to say in my presentation, as to how to redefine affordability. That affordability is not defined by financial resources, including those in the government's coffers, but is defined by what we can produce. You know, we can afford to consume what we can produce, and it makes no sense to have idle resources, for example, teachers unemployed, so we haven't got enough money to employ them when they're there to be employed and to generate their output.
So just with you still, Geoff, we got a potential follow-up. There's the question here from Harold saying that Anne Pettifor, in her book, The Production of Money, How to Break the Power of the Bankers, has described sovereign money as an intellectual dead end. Do you know why?
I don't know why. I mean, I know Anne's position from what I read of hers. I've tried to correspond with her, but frankly, I've never had a reply. So I don't agree with that position, of course. I think it's a perfectly intellectual, credible position to be made for sovereign money. And when you get somebody as influential as Adair Turner backing sovereign money, Martin Wolf, etc., in the Financial Times also. So there is a significant convergence now of intellectual thought that sovereign money actually makes a lot of sense. And what is the alternative that Anne Pettifor wants us to continue issuing government money with debt, and the debt becomes insurmountable. The interest cost in the UK on the debt at the moment is £39 billion a year. So you can see it has a significant effect upon the revenue account. So no, I don't know the basis for Anne's position. One, I guess, would have to invite her to explain it.
Okay, and Francis, do you want to add to that? Sort of, so, you know, is it just financial ignorance that is why people ask, how will we pay for it?
That's a lot of it, certainly. But I think also we shouldn't underestimate the effect of what has been an enormous paradigm shift from a monetary system which was backed by gold, where governments didn't have their didn't issue their own money, or if they did, it was constrained by the availability of this commodity that they did control, but they didn't, and so forth. choose one where governments are sovereign and they can create all the money that they need and it's all electronic. I don't think you should underestimate that. The gold standard thinking still holds, because actually it's quite hard to make that mindset shift. We're still used to, but it's got to be backed by something. And I said, well, no, it actually isn't backed by anything. If you take a £10 note to the Bank of England and say, I want, redeem it, they'll give you £10 coins. You know, and that's hard for people to get their heads around. The idea that what creates value in money, for the value of our money, is our economy, it's our productive output, not some, you know, dead rock. But we did rely on dead rocks for hundreds of years, and it is very hard for people to mentally make that shift to a completely different way of thinking.
Thank you. A question from Mark. Since the amount of UBI is limited by the productive capacity of the economy, does that mean the UBI level would vary with the business cycle, e.g. in high in a recession, low in a boom? Wouldn't that violate the principle that UBI should be stable foundation, be a stable foundation? Francis, would you like to answer that?
Yeah, this is a good question. You know, because it depends how you regard your basic income, what you want it to do. I mean, UBI is not the only government spending. There's lots of other government spending in the economy. So, yeah, in theory, if the value of your money is determined by your productive capacity, then if your demand for your money is outstripping your productive capacity, then you get inflation. Then you need to either increase your productive capacity or reduce your amount of money. That's roughly how it works. Whether you do that by adjusting your basic income downwards, you could do. It is something I mentioned actually in my presentation, but it's not your only option. You can do. You can raise taxes. Avoid hitting the poorest, which is what happens if you adjust your basic income downwards, and potentially means that those who have broader shoulders, those who have more money, bear more of the cost of the downturn. I mean, these are political decisions in the end. It's necessary for your universal basic income to reflect the business cycle. There are other ways of doing
it. Geoff, do you want to add to that?
I think firstly that boom and bust would be less of a phenomenon with well-managed aggregate demand. You know, there's a fundamental Keynesian point of view. So there'd be less of this boom and bust because aggregate demand was properly managed and people had the funding for their effective demand. But on the other hand, if you get huge shocks to the economy, such as we're going through at the moment with COVID-19 economic results, or after a war, for example. So if it's unimaginable, if the supply side of the economy suddenly was halved, then you wouldn't be able to continue with the same level of income, either earned income or basic income or any other income that you had when the economy was running at 100% production. So income must be dependent upon production. And in an aggregate sense, COVID-19, if it is going to hit, as it might hit, the supply side of the economy in a fundamental structural way, then we won't be able to afford to consume as much if we're not producing as much.
Thank you. A question from Jane. Doesn't UBI inevitably redistribute purchasing power to poorer people, which means redistributing it from richer people? If so, how do you take that purchasing power from the better off? Geoff, do you want to start with that?
Yeah, I wrote a paper recently for the review of real-world economics on basic income and inequality. And it cannot just be assumed that a basic income will necessarily reduce inequality and promote equality. It depends upon the detail of the basic income scheme. And for example, some of the work done by the Citizens Basic Income Trust in the UK, led by Malcolm Torrey, has shown that there are schemes which actually increase child poverty, for example. So the scheme has got to be very careful in the way that it's designed. But fundamentally, of course, as Francis says, these are political decisions. So what size of basic income is allocated will determine what level of redistribution occurs. And I guess most of us want to see some level of redistribution in the interests of those that aren't getting economic justice at the moment, that are struggling with very poor incomes, very low wages and the rest of it. So proportionately, yeah, I mean, reducing inequality means that those who currently have a lot will get somewhat less, and those who don't get enough get more.
Francis, do you want to add to that?
Yeah, I broadly agree with what Geoff's saying there, really. I mean, ultimately, these are political decisions, and universal basic income is popular on the right among people who actually want to see much less redistribution, because you can simply give people a basic income. It's not taxed. You know, you can have tax cuts for the rich, and they've got basic income on top. Suddenly you've increased inequality. Now, I don't think you can assume that a universal basic income is necessarily going to create justice for the poor. All it does is create a floor. And in some versions of the scheme, it may mean, and particularly in developed countries, may mean the poor getting less than they do now. And indeed, that is why some people on the right are in favour of it. And we need to be a little bit careful here. Like I said, these are political decisions. Universal basic income gives people an amount of money, but you know, it can be that the way it's designed actually doesn't relieve poverty much and does increase inequality. It's all a question of how you do it.
Yeah, can I also say that if you fund it by a reduction in other benefits, then of course you may well not be reducing inequality, but funding it by sovereign money has more option to reduce inequality as we have it at the moment.
Thank you. Another question, which I guess comes to politics a bit. It's from Ursula. Sovereign money creation does open up fiscal space for increased government spending, but only substitutes the illusory budget constraint for the actual resources constraint. Politicians will still have to choose what to finance by this means. Does this really move things forward? Do you want to start with that, Geoff?
But well, I agree with the question, but I think it does move things forward in that it removes the artificiality of the debt constraint. You don't produce deficit and debt when you issue this money. That's the view that Stephanie Kelton is making in the deficit myth, which I agree with. So it does change things, but the question is right in that it doesn't change the need to recognize that there is a constraint in terms of what you can produce. You can consume what you can produce, but you can only consume what you can produce. One of the other arguments that Robert Skidelsky has made is that actually the present economy could be capable of producing more. And therefore that the constraint is in terms of real output is also artificial. It could produce more, and it could produce more in an ecologically friendly way. So that all those options need to be examined in this new paradigm. But yes, sovereign money does change the constraint from deficit to real output. But you can't get around a real output constraint without increasing real output.
Francis, do you want to add to that?
Yeah, I think the one thing that hasn't been discussed enough here, that actually a government that can create its own sovereign currency, the exchange rate needs to float. And so for countries that are not issuing debt but are issuing sovereign money, any imbalance between the productive output of the economy and the quantity of money in circulation would actually be felt in the exchange rate. So there's still a constraint, there is. And I don't think we should necessarily regard sovereign money as a way of avoiding that essential constraint. I mentioned inflation, exchange rate, it has the same effect. It's the same kind of thing, really, that as Geoff was saying, if you're not getting enough, then you have to weigh down on demand. So there isn't any way around that. All it's doing is eliminating the artificial constraint of governments must fund themselves with debt. which is not true and has not, certainly for the United States and the UK since whenever. But that doesn't mean there's no constraint, and we should bear in mind the constraints.
Yeah.
Okay.
Can I add something, Emma?
Okay.
I also didn't agree with the MMT school that the EU couldn't issue sovereign money. My view would be that the EU has simply shifted the locus of its sovereignty. So whilst any individual government can't issue its sovereign money, as a joint currency union, and they can decide to issue money at union level, at EU level, through the ECB. Of course, they've done this through quantitative easing. I mean, once quantitative easing in the UK was 430 billion, in the EU, it was 2.4 trillion euros. So they're capable of doing that. But in this case, it would be sovereign money at ECB level. So they've just shifted the location of their sovereignty. So I think that the MMT school, and particularly Randall Wray again, are wrong about that, but they're viciously against the euro.
That's a really interesting point. So I want to try and squeeze in these two more questions, but we're sort of, I've realized that time's sort of racing by. There's a question here about inflation from Reinhardt. One major objection to the creation of money is inflation. There are real life experiences of this problem in Germany in the 1920s, and actually Zimbabwe or Zaire, now the Democratic Republic of Congo. How do you counter this fear with a good explanation? Geoff, do you want to have a go at that?
Yeah, well, it's always struck me as interesting that the one bit of economic history nearly everybody knows is the Weimar Republic, when inflation was so high that people were reputedly taking their wages home in wheelbarrows and so on. You know, that's a phenomenon that's horrendous and we clearly don't want to revisit, and Zimbabwe is the other example that people quote. But, you know, governments do issue money at the moment. We're not saying they don't currently. Governments currently issue money. I've got money in my pocket, and probably many of you got money in your bank accounts and so on and so forth. So money is already issued. The question is not whether you issue money or not. The question is how much money you issue. And as we both agreed, Francis and I think Emma as well, I don't want to put words in your mouth, but I think we've all agreeing that money issued up to the level of your output makes sense. It's balances the ultimate fundamental equation.
Francis, do you want to add to that? If you could be brief, we could fit in sort of one or two more questions. So.
Okay. I'll address this as quickly as I can. Hyperinflation is a pretty rare phenomenon, and it is associated with supply side curves and usually, nearly always, with a basket case government. We're really talking about governments that are heavily indebted. They have heavy external debt. They're borrowing not in their own currency. They're printing money to try and buy more of that, whatever it is they've got to pay on the open market. That's what happened in Weimar. That's what's happened in Zimbabwe. That's what's happened in Venezuela at the moment. You're not talking responsible governments paying a basic income to their citizens, which they are financing with sovereign money creation in proportion to their GDP. It's a totally different scenario. And I think that there is nothing more I would say than that. I don't think we should scare ourselves with stories of basket cases as an excuse for not doing responsible money creation.
Okay, thank you. There's a question from Barb. I was wondering if the panel could consider how, if pilots could perhaps be finance done through local currencies backed by local authorities. This would mean councils accepting the local currency in at least part payment of business rates council tax. And it's a little bit related to the question from Sam. The Scottish Government is keen to introduce a UBI for the Scottish people. Does this mean that Scotland must have her own currency, i.e. be independent in order to do this? Francis, would you like to start with that?
The problem with using a local currency for a UBI is that it's got to be something that people can use, and they've got to be able to use it for the things that they need to buy, which might mean paying their mortgage or paying for a train ticket to get to work or whatever. And there is no guarantee that local currency would be so usable. The experiments we've had with local currencies have been that they actually aren't very acceptable for that kind of thing, and therefore not terribly usable. So you have to, if you're going to do that kind of local currency pilot, you'd have to make sure that it really was usable for all the things that people, the essential things that people need to do in their lives. Otherwise it won't work. And if I can talk quickly about Scotland, because it really is that issue, that without their own currency, they will be in the same position as a member of the Eurozone trying to do UBI by sovereign money creation without the agreement of the ECB. It's not going to happen.
Geoff, do you want to add to that?
Thanks, Bob, for that question. As Bob probably knows, I'm not actually a great fan of pilot projects. I think we've had several pilot projects, and they do tend to show what we expected, that if people have income, they feel better about it in all aspects of their life. And I think we know that. So I also worry that more local pilots put off the great day we all need to see when there is a macroeconomic nationwide implementation of basic income, because that's the only thing that will test the macroeconomic implications of basic income. You know, the UBI scheme is supposed to be universal, unconditional, long-term, it's here to stay. And a pilot, by definition almost, can't achieve those fundamental elements or definitions of a UBI scheme. I personally want to see a pilot, but I want to see a macroeconomic pilot. I want to see a nation put, you know, 50 billion quid, or whatever it may be, into basic income and get going and see how it really affects the macroeconomy and the nation. Yeah, I think that's perhaps enough.
I think one more question. There's a question from Alex Howlett. Under what conditions would basic income cause inflation to rise, or is basic income a form of fiscal stimulus? Yeah. We've discussed this a little bit already, but do you want to add anything to that?
Well, but do welfare benefits cause you know, inflation to rise? Sorry, Francis, you're about to speak.
It's okay. I think we can kind of take this together, can't we? Really? Yeah, we have discussed this a bit. I'm not very comfortable with regarding something that is intended to be permanent as fiscal stimulus. I think it's a misnomer. I think helicopter money, which I've also written about, is what I would call fiscal stimulus. Basic income, I think, would be more accurately described as a stabilizer. It would be something that dampens the swings in the labour market that cause untold misery, and actually also tend to amplify economic shocks, because, and that's partly because, as Geoff will explain, that's partly because of the level of debt in our economy, that actually people who lose their jobs, people who lose their incomes, then can't pay their debts, that amplify economic shocks and make bigger recessions out of little recessions. And so, you know, if we could actually stabilize people's incomes and get rid of the debt, then potentially we shouldn't have these huge swings that are destabilizing the economy. So, and that's how I would prefer to see a universal basic income, is as a stabilizer, not as fiscal stimulus. I think that would be a more accurate way of putting it.
Yeah, I have a similar view about helicopter money. I don't use that expression myself because it gives the impression of irresponsibility, you know, and of a kind of freak out event. Whereas sovereign money is a very sensible, very well argued, stable way of running an economy.
Okay, well, thank you so much for both of you for your brilliant answers there. And I think now I'm going to hand back to Michael, who wants to say a few things to wrap up. So thank you.
That's right. I'm conscious of time and people have evenings to get to. So thank you for everybody for submitting those questions. I'm sorry we weren't able to get to all of them, but perhaps we can we'll try and collate them and get them to Francis and Geoff afterwards. I've learned a lot this evening. I went into this evening not knowing a huge amount about how it would work practically, and I had many of the same questions that you all had this evening. So I've learned a lot. I hope you have too. That was the aim. I want to say a huge thanks for joining, and particularly those who are listening back online. Thanks for sticking with it and taking part. For those joining this evening, we will be putting the recording up on YouTube tomorrow morning, so you can watch it back from them. And if you signed up via our email list, we'll get an email list of that link to you. As I mentioned right at the beginning, for those and perhaps those that didn't catch it, tonight has been our third and final event in our series of basic income research events this summer. So what's next? And when it comes to the research, the summer series has been a bit of a preview. For later on in the year, we'll be launching our research network, which will really be aimed at those who are interested, like many of you are this evening, in going to a little bit more depth about some of the research around basic income. And again, if you're on our mailing list, we'll get information about that over the coming weeks and months. But research is just a small part of what we do. We are organising to help make basic income a reality through both our political and our civil society networks as well. So later this autumn, we'll be launching our basic income conversation toolkits, which will help for those of you that are interested in starting these conversations in your own living room with your friends and family, or in your communities. And so we can continue to build the power and make the case to Westminster. There are others, Reinhardt and others, who have been on the call this evening from the UBI Lab Network. If you're interested and based in the UK, do check out the UBI Lab Network and see if there's one in your area and you might be able to join. And if there's not, maybe start one in your local area. A huge thanks again to everybody who's joined this evening. It leaves me to say a huge thank you to particularly Emma, Francis and Geoff for taking part this evening and giving up your evening and sharing so much knowledge with us this evening. I found it really useful, and I know others have too. And it leaves me just to say have a lovely evening, everybody. We've started on time, we're going to finish on time. Take care, and speak to you all soon.